This is death of a partner, which will be asked for 6 marks. You can keep this as a last choice. First try to attempt the other sums. People who are attempting death of a partner, it is actually easy. Even this is easy. Okay. Ramesh, Prakash and Suresh are partners sharing profit and losses in the ratio 5:3:2. They give the balance sheet and then they say Ramesh died. So this is death of a partner. It was agreed between his executors and the surviving partners that goodwill to be valued at 2.5 years purchase of the thing. So details how to calculate goodwill is given. Share in the profit from the date of last balance sheet till the date of death is calculated on last year's profit. Interest on capital to be allowed at 12% per annum. Prepare Ramesh's capital account. So we will prepare only the partner who died. So you will write his heading, that is Ramesh's capital account. Capital account. Please see what is asked. If they say Ramesh's executor account, you will write Ramesh's executor account. If it is capital account, I will write by balance brought forward. If they ask you to prepare Ramesh's executor account, it will be by Ramesh's capital account. Okay. So here, because it is Ramesh's capital account, I will write by balance brought forward. This is your debit side. This is your credit side. Particulars, amount, particulars, amount. Okay, now how much is the balance brought forward? The capital balance, as usual, from the balance sheet you will write 30,000. See, any capital account for that matter, the format is the same. You will begin with capital balance on the credit side by balance brought forward. Then if you have reserve, okay, 6,000, so you will distribute that reserve to him. By reserve, how much is Ramesh's share? In 6,000, Ramesh will get, his share is 5. So 5 by the total, 5 by 10, which is 3,000. Okay. See, the question can be given in this way. That means they will give a balance sheet like this and give, or it will be given, the question can be given in statements. When they give it in statement, that time they will say the reserve fund, the total reserve fund, the reserve fund is 6,000. Or they can say his share of reserve fund is 2,000, which means it is already calculated. When they specify, read the statement properly. When they say his share, when his share is given directly, all that you do is copy it directly. When they give the reserve fund of the firm, then you have to calculate his share. Okay, I distribute the reserve. Next, check if you have profit and loss. It's not there. So I can move on with the adjustments. They say goodwill to be valued by 2.5 years purchase of the thing. Again, goodwill sometimes can be given directly. See, there are 3 ways of giving goodwill. One, they will give it like this, wherein you have to calculate the goodwill of the firm and then calculate Ramesh's share of goodwill. Or they will give goodwill of the firm directly, where you don't have to do this calculation. When they give the goodwill of the firm, you will calculate Ramesh's share and then distribute. The third case is they will give Ramesh's share of goodwill directly. So you will distribute it directly. Okay, now here you have to calculate goodwill. Now how do I calculate goodwill? I've told you goodwill formula is goodwill is equal to number of years of purchase into average profit. Okay, now how do I find out average profit? They've given 4 years profit, 1, 2, 3, 4 years profit. So total all those 4 years and divide by 4. So 12,000 plus 20,000 plus 13,000 plus 15,000 divided by 4. That gives me 15,000. So that's your average profit. I repeat, average profit is total profit divided by the number of years. So find the total of all the 4 years profit, divide by 4, that gives me average profit. Now how much is your number of years of purchase? They've given 2.5 years purchase. So it is 2.5. So when I multiply, I get the goodwill as 37,500. Now this is your goodwill. This is a goodwill of the firm. Please understand, they've given the goodwill of the firm. That is 37,500 is the goodwill of the firm. Okay, now in this I should find out what is Ramesh's share. What is Ramesh's? Ramesh is the person who died. So Ramesh's share of goodwill will be 37,500 into his share. What is his share? 5 by 10. So into 5 by 10, which gives me 18,750. Now in this, who will give this 18,750? It has to be given by it has to be borne by Prakash and the other partner, Prakash and Suresh. In which ratio? In the gain ratio. That is, live 5, the left out 3:2. That means these two will gain because of his leaving out the business. As I said, retirement and death is almost the same. So these two people will have to contribute goodwill to the person who died or who's retiring. So in 3:2 ratio, Prakash and Suresh will give 18,750. Now how much will Prakash give? 3 by 5 into 18,750. Suresh will give 2 by 5 into 18,750. Now as I said, on the credit side, you will show who's giving goodwill to whom. Okay. In admission, the new partner will give it to the old partners. Okay. In retirement, the continuing partners will give it to the retiring partner. In death, the continuing partners will give to the deceased partner. So I will write the continuing partners. Now who will continue? Prakash and Suresh. So I will write by Prakash's capital account, by Suresh's capital account. Okay, now how much is the goodwill? We calculated 18,750. So in 18,750, this is Ramesh's goodwill, which these two people have to give. In which ratio? 3:2 ratio. So how much will Prakash give? 3 by the total. And Suresh will give, in 18,750, he'll give his share, which is 2 by 5. So when I do that, I get 11,250, and Suresh will have to contribute 7,500. Done. After this, after treating goodwill, the next adjustment. I repeat, if it is given this way, this is how you calculate the goodwill of the firm, and then you calculate Ramesh's share and then distribute it, which has to be contributed by the others in gain ratio, is what you show here. If they give goodwill of the firm, that means when they give the goodwill of the firm, this is what they will give. So as usual, you will calculate Ramesh's share and proceed this way. The third type, I said, sometimes they will give Ramesh's share of goodwill. That means they will give this. In the question, when they clearly mention his share of goodwill is 18,750, they've already calculated for you. You have to do from here, who's giving, how much they're giving, you have to show. Okay, the second one, share in the profit from the date of last balance sheet till the date of debt to be calculated on the basis of last year's debt. Again, this I've done it in detail. The logic is being explained. If it was last year's profit, I just give his share. Okay, because he was alive the whole year. But this is the last year's profit when he was not alive. He died in between. He died on 30th September. So that year's profit, they assume that it can be same as the previous year's profit. That means it can be 15,000. So on that basis, you will give. So what will you do? You will write, you will call that as profit and loss suspense account. Okay, now suspense account, how much is the profit is based on the last year's profit, 15,000. On 15,000, I will calculate his share, because this 15,000 is the profit of all the three partners. What is Ramesh's share? Ramesh's share is 5 by 10. So 5 by 10. Okay, if I calculate this, I'll get the profit of his profit for that 1 year. But was he alive the whole year? No, he was alive only for few months. You calculate the months he was alive. He died on 30th September. So accounting year starts from April. So April, May, June, July, August, September. So he was alive for 6 months. See, it says 30th of September, which means he was worked for September also. So 6 months. So 6 by 12. So when I do this, I get 3,750. Okay, this is his share of profit up to the date of death. Next, interest on capital to be allowed at 12%. So interest on capital will come this side by interest on capital. Now how much is the interest on capital? They say 12% per annum. How much is his capital? 30,000. On 30,000, give him 12%. It says per annum. Was he alive the whole year? No, he was alive only for 6 months. So give him 6 months interest. So that will give him 1,800. Done. There are no more items, so I close this account. When I close it, the total I get is 57,300. 57,300. So there's nothing here. So the balancing figure is 57,300, which I will call it as to Ramesh's executor account. So this is your balancing figure. Okay, suppose if they had asked you to prepare Ramesh's executor's account, you will begin with by Ramesh's capital. The closing balance will be two balance carried down because it is executor's account that you prepare. If it is capital account, you will begin with by balance brought forward. You will transfer the balance to the executor account. Okay, the twist they can keep in this is, like, as I said, sometimes they'll give it with balance sheet or just the statement. So understand what is given. For few things you have to give only the ratio, that is when they give reserve fund, profit and loss of the last year, joint life policy, all such items you will give only his share. Okay, for which time has to be considered is interest on capital, profit and loss suspense account, items like salary, commission. You should see what it is given. When they say per month, okay, salary is 1,000 per month. Ramesh is entitled to be given salary of 1,000 per month. So he was alive only for 6 months. So I will do 1,000 into 6, 6,000. If they give it per year, then I will do 6 by 12. Okay, if the salary for 1 year is given, then I will calculate for 6 months and then write it. Okay, that's all. Apart from it, it will be the same. Find the balancing figure and transfer it to executor's account.